Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets.
Kansas City wheat. In early October last year, the market broke down and out of the August to October 2022 bull channel. A choice was now presented to this market for the future. This is a parallel to what we saw at the time in other wheat futures markets. Thus, this market had two avenues. And the market chose what I described in my commentary from many months ago, and I quote, the straightforward move down with potential targets for the break below the bull channel, break of the bull channel. Thus, we have a primary target X down in the 903 zone, whilst the secondary hard to reach target X1 is way down below in the 759 zone. End of quote. In late November, prices reached the primary target at 903, but then everything hit the bright red trend line across my daily chart, formed of the neckline of the small but influential October 2021 to January 2022 head and shoulder stop, currently at 845. And things slowed and became quite obtuse with contradictory patterns, one after another. The market eventually did manage to reach down 4 weeks ago and achieve target X1 at 759 before recovering back up, though the rise had been limited by, as I pointed out 6 weeks ago, by the 50% Fibonacci line of the August 2020 to May 2021 move at 900. In the process of trying higher, the market created a small horn top over mid-May, as well as a weekly key reversal down 5 weeks ago, leading to a monthly key reversal down for the whole of April. However, in keeping with the contradictory nature of this recent market, the action in May, so far, has also managed to set up a situation for May itself to possibly be an outside month, or even potentially an immediate countering monthly key reversal up. Thus, with still about a half a week to go, should prices close on the 31st of March, either above 31st of May. If prices should close on the 31st of May, either above 862 or under 776, then we'll be on for a monthly key reversal. Right now, well, we are still, as we did last week, we're still looking at a possible lesser outside month pattern. It is this time that I'd like to introduce part of my commentary from 6 weeks ago, and I quote, I continue to be in a bit of an indecisive mood over this market. I can see good supports below and I can see good resistances above, probably reinforced with the declining long moving average, that's currently 875, plus also the 50% Fibonacci on the August 2020 to May 2021 move further higher at 900. Overall, much like last week, there seems to be no immediate pattern or path. Perhaps we will just go sideways for a bit, for a question mark added onto that last statement, end of quote. The situation has not really changed much since then, despite some earlier wider ranges. I can see potential patterns, perhaps a diamond pattern or a reverse head and shoulders pattern, but I am not confident enough in those patterns to highlight them in any way, not just yet. Minneapolis wheat. Now, compared to Chicago wheat and Kansas City wheat, Minneapolis wheat here continues to be an easier read with respect to what is going on and what the opportunities might be. In late January this year, prices punched up and out of the upper bear channel line of the first bear channel constructed between October 2022 and March 2023. Then 12 weeks ago, we had the first glimmer of bearish pressure coming from how the medium moving average, currently at 869, capped the market over the week of the 13th to the 17th of February, with a subsequent move lower the following Monday, the 21st. There was some hesitation at that point, which eventually became a bear flag over the turn of February into March. This had a potential target down in the 810 zone, and at the first attempt we came so awfully close to reaching it. However, this was not yet to happen, as the market had to construct a second bearish pattern, a bear channel, that morphed into a descending, expanding wedge pattern, originating from December last year, but really becoming evident by February of this year. This was a second shallower bear channel, currently 885 to 750, and is highlighted in dark blue on my daily chart. The upper trend line, currently 885, has been reinforced sort of nearby by the previously mentioned declining medium moving average, currently 869, which combined to help cap the market in early April. Then mid-April, and again last week, it was as part of the reaction down and away from the upper bearish trend line that finally saw the market reach down and achieve the target at 810. So, looking at this week, it seems for the moment that further attempts on the downside are not being immediately attempted. Overall, the bearish patterns, despite the bearish patterns, overall the weekly key reversal down last week is also something to be taken into account. We will have to see how the bear channel come descending expanding wedge pattern develops and where the market thinks it should fit into this pattern, driven by it or driven out by it.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.